From Washington, D.C., this is Balance of Power with Joe Mathieu.
The White House set to embrace artificial intelligence. Welcome to the Tuesday edition of Balance of Power as the Trump administration prepares to unveil a plan to push American AI technology around the world and also crack down on states that put forth restrictions on the technology. I'm Joe Mathieu in Washington. Thanks for being with us here on the Tuesday edition of Balance of Power. We'll get an update ahead from Bloomberg Washington correspondent Tyler Kendall with her view from the White House following a bilateral meeting between the president and the president of the Philippines. We'll also have insights from Ann Neuberger, the former deputy national security advisor for cyber in the Biden administration, and analysis from Bloomberg Politics contributors Rick Davis and Jeanne Zaino. We wind up the band once again here on Bloomberg TV and radio, starting as always with a look at Wall Street. Charlie Pellet has his eyes on the markets at world headquarters in New York. Charlie?
And good day from New York. Once again, Joe Mathieu, we have got the Dow higher, the S&P, NASDAQ, both declining right now, right to the numbers, with the S&P falling 6 points, little change down just about 0.1%. The Dow's advancing 60 up 0.1%, while the NASDAQ Composite Index right now down 102 points for NASDAQ, a decline of 0.5%. A slide in several big tech names, dragging stocks down ahead of earnings tomorrow out of both Alphabet and also from Tesla. Our Mag 7 index ahead of those reports down 0.8%. The 10-year 4.33%, the 2-year 3.82%, and the 30-year 4.89%. Gold surging 1%, 34.32 the ounce on the precious metal. A retreat for crude. West Texas Intermediate down 1.4%, 66.25 a barrel, and Bitcoin up 1.5%. Bitcoin right now at $118,000, just about $118,600 on Bitcoin. So the bottom line here, stocks lower, S&P slumping by 0.1%. We're keeping an eye on coal shares. Coal's rocketing higher right now. Coal's up by 34.5%. The department store chain, but it is the newest meme stock amid an influx of mentions by retail traders on social media. Again, bears repeating, coal shares surging 34%. Yesterday, we saw Open Door Technologies jumping 42%. Today, Open Door just about unchanged on the day. Recapping, S&P down 5, drop there of 0.1%. Balance of Power continues now. Back we go to Washington. Once again, your host, here he is, Joe Mathieu.
Charlie Pellet, thank you so much. We're be having our conversation with Ann Neuberger, the former deputy national security advisor for cyber in the Biden administration, coming up on this eve of AI Day at the White House. AI Week is actually how the administration is framing it. But we have a lot to get to before then. The president today with trade on the agenda, sitting down with the president of the Philippines, Ferdinand Marcos Jr. inside the White House right now, knowing, of course, that Donald Trump has threatened a 20% tariff against our ally in the South Pacific. The president speaking a short time ago with reporters alongside President Marcos in the Oval Office. Listen.
Well, it's tough. He's a very tough negotiator. So far, we're not there because he's negotiating too tough. In fact, I used to like him better than I do now. He's too tough. But we'll probably agree to something. But he's strong, a strong negotiator. He loves your country.
We'll see if a trade deal emerges here. They're meeting right now, in fact, over lunch following the bilateral meeting in the presence of the White House press corps. Bloomberg's Tyler Kendall is with me right now in Washington, having watched what turned out to be, Tyler, a roughly half-hour news conference, a briefing, if you will, a bit of a weave with President Trump here through a series of issues, from trade, we didn't spend too much time on that, to Jay Powell, to, in fact, the Russia investigation dating back to the 2016 election. The real news today, though, has to do with tariffs. What could come of this?
Right, exactly, Joe. I mean, we have to put into context here that we did see the Philippines receive one of those long-awaited trade letters, and they actually saw their tariff rate go up. You said it there. They're facing a 20% levy on so-called Liberation Day. They were facing a 17% levy. So it didn't appear that negotiations were really going in their favor. And of course, this is actually one of the first visit of a head of state from the Association of Southeast Asian Nations, ASEAN. And that's important because these were really countries that were prioritized in these trade talks, but that we really haven't seen much movement when it comes to any sort of framework deal being announced. Now, the Philippines does run about a $5 billion trade surplus with the U.S. The U.S. is on the deficit end, so this is something that the administration is definitely looking to try to advance and move forward. But why these nations were really prioritized has to do with China, which of course also came in to the conversation today. We heard President Trump saying that perhaps he will visit China in the not so distant future. And he also confirmed that they have started to see, or rather he suggested that those export licenses related to rare earth minerals and magnets have started to speed up. And we know that that's something that we watch really closely because that's really been at the crux of the negotiations with Beijing.
Interesting language, very Trumpian. We're going to have a very good relationship, he said. The country, referring to the Philippines, was maybe tilting toward China. He said, we're untilting it. And you wonder what kind of details we might get following this meeting today. But he talked about a lot more than trade. He got into the matter involving Jay Powell, and I should be clear, he was asked about this by a reporter. This was the first thing that came up when this went to Q&A following their opening remarks. Having heard the president, of course, threaten to fire Jay Powell, listen to what he said today.
I think he's doing a bad job, but he's going to be out pretty soon anyway. In eight months, he'll be out. But I call him too late. He's too late all the time. He should have lowered interest rates many times. Europe lowered their rate 10 times. We lowered ours none. And it's causing a problem for people that want to buy a home. Look, our economy is so strong now, we're blowing through everything. We're setting records. You know that. You see that. And whether it's the Philippines or anyone else, we're setting records at levels that nobody's ever seen before. But you know what? People aren't able to buy a house because this guy is a numbskull. He keeps the rates too high and probably doing it for political reasons.
Interesting, though. It sounds like he's going to let Jay Powell run out the clock, and it follows the comments we heard from the Treasury Secretary earlier, kind of tamping down this idea that Jay Powell should resign.
Right. The question seems to be here in Washington is, are they trying to build up the momentum to fire Jay Powell or to force perhaps a resignation? And you're exactly right. You did say that he's going to let him perhaps run out the term, alluding to May of 2026 when Jay Powell would be up as Fed chair. But he also touched on the recent renovations of the Federal Reserve, saying that he wants this to be looked into. We had Bill Pulte on the program last week who said he's confident that there's going to be a congressional investigation into this. We had Lisa McClain yesterday telling you and me on Balance of Power that she doesn't want to get ahead of anything, but she didn't rule it out that lawmakers would ultimately look into what has been cost overruns at the Federal Reserve, though the Fed, of course, says that everything is in order. They've only been truthful in their testimony about these renovations. But it is interesting because they seem to be walking the line here at the administration. You have Scott Bessent, of course, as you alluded to, saying that at the moment he doesn't see there is a need for Powell to be gone, though he would like to see these lower interest rates. But they're starting to talk about this idea of mission creep. And that really seems to be where the administration is focusing their rhetoric at the moment.
Really interesting. Tyler, just quickly before you leave us, we're going to have AI on the menu for tomorrow. This is the big plan that we've been waiting for, the blueprint, if you will, from the administration that has little to do with restrictions and a lot to do with energy. What are we going to learn?
Right, exactly. And this is something that we've been expecting from the administration. I was at the AI Innovation Summit last week in Pittsburgh, where President Trump really tried to tout that the U.S. is trying to keep this edge when it comes to China. Now, we are expecting him to announce perhaps these policy guidelines around artificial intelligence that would really have to do with easing regulation, but also expanding the energy resources. And that was a big theme that we heard last week as we had the CEOs from Exxon and Chevron sort of descend on this policy summit to make the case that there does need to be more energy production in the United States. I can tell you from the experts that I have spoken to, including the U.S. Energy Secretary, that they're really going to need a holistic approach because there is just so much demand. And that does open up the door for other sources of energy, whether that be alternative energies or nuclear, for example. That's one that we keep hearing about when it comes to production in the United States.
Following your conversation last week with the CEO at CoreWeave, it makes you realize how many of these deals are emerging, Tyler. Thank you so much. Reporting for Bloomberg at the White House, Tyler Kendall with us. in person today in Washington, D.C. This is the story that we wanted to get to with Ann Neuberger, because it's going to be something that we talk about a lot tomorrow. It's actually getting a lot of talk today. Sam Altman, OpenAI, is in town speaking at a Federal Reserve event. In fact, you can see that live on Bloomberg TV and on YouTube. He's in the process of speaking right now about what could be, and I think we can all agree, the most important technological trend before us. Ann Neuberger was tasked with gauging the risks and potential benefits of artificial intelligence when she worked in the Biden administration as the Deputy National Security Advisor for Cyber and Emerging Technology, and is now Payne Distinguished Lecturer at Stanford University and with us live on Bloomberg TV and radio. Ann Neuberger, welcome back. You've heard the way this is being framed. I know we'll get the official document tomorrow, but the idea of not bringing guardrails, adding guardrails to AI, but tearing them off seems to be the approach the White House is taking, going so far reportedly to actually penalize states when it comes to funding if they add their own restrictions. Is this the direction we should be taking, or one that scares you, frankly, about the future of artificial intelligence?
Thanks, Joe. It's good to be here with you. The discussion has always been about responsible innovation, and I think what we'll expect tomorrow is some efforts to reduce regulation, largely as noted around electricity, accelerating permitting, since the United States does need a great deal more of new plants in order to power large models that are core to artificial intelligence, as well as efforts to accelerate private sector innovation and potentially use tools like government financing tools to help the U.S. compete with China in deploying AI, particularly in developing countries.
Well, it doesn't sound like you're worried at all then. Is this the approach we need to hasten America's place in this development? Because AI is either going to go, they say, to America or China. And there's been a very careful approach, certainly was in the prior administration, for fear of the impact that AI could have on competing technologies, on the job market, on the overall economy.
So my own view is that the risk and the opportunity in AI is actually in deployment, and where we take the power of large language models and apply them in manufacturing, in robotics, in education. That brings a great deal of opportunity. Accelerating innovation also brings some level of risk. For example, in cyber, the opportunity to use models to find vulnerabilities, either to exploit them or, on the positive side, to find them in order to fix them. So I think the key will be, as the Trump administration takes steps to promote innovation, that we also ensure that the organizations that are deploying AI are thinking carefully about what are the related risks, whether that's to actual operations, whether that's to decisions that are given to AI models, and ensure that they understand how models are used, they're explainable, they keep humans in the loop on key decisions, and they're really continuously reassessing the risks of those deployments. But there's a lot of promise in AI. And I think it's exciting to see these steps that will do things like enable the United States to compete in building more power plants, in accelerating permitting, or potentially helping companies around the world with government financing to ensure that as deployments of AI happen in countries around the world, it's happening on U.S. artificial intelligence rails, using our models and our infrastructure to promote this next stage of innovation.
Well, you sound a lot like Jensen Huang and a little bit like the White House in this case. And the idea to promote open source, this is what we're going to hear tomorrow, and open weight AI development, and, quote, export American AI technologies through full stack deployment packages, almost like what you just said. What are the national security implications of this, knowing that the White House just recently loosened export controls on NVIDIA's H20 and a different chip, competing chip from AMD in China? If we're talking about full stack deployment packages around the world, what does that mean for countries like China?
The national security risks really are that AI powers military and intelligence applications. And in the competition between the U.S. and China on the global stage, we want to ensure that U.S. technologies are not being used by China to promote its intelligence and military advancements. And that's the key. That was the thinking behind export controls, to ensure that the highest end chips that are produced by the United States are not made available to China. And that is the core concern that we have in the area of national security. There are secondary concerns in the area of how does AI models in the hands not only of China, but of adversaries around the world, transnational terrorist criminals, accelerate cyber attacks, potentially accelerate advancements in bioweapons. Those are a broader set of concerns, and that's why it's so important that the companies generating AI models ensure that there are controls, and that's the reason why government is maintaining a careful eye on advancements in models, on the controls that are built in models, and also considering how we would defend against potential advancements in those areas.
Do you trust this administration to guide the way on this technology a day after President Trump posted an AI video of Barack Obama being arrested in the Oval Office?
There are many parties that have a key role in ensuring that AI is used responsibly. The government has that role, governments around the world. Most importantly, and not most important, but I would say very importantly, private sector that is generating these models or deploying these models. They're partners in assessing them carefully and in ensuring guardrails are built in as models are used. When we come to U.S. leadership in chips, that's clearly a national security goal for the United States. But I would note that chips is one part of global leadership. It's also who's using our models, because values are baked into models, and we want to ensure that those American values are built in as countries around the world, as companies around the world begin deploying AI.
As we spend time with Ann Neuberger, I have to bring up what's going on at Microsoft. Ann, this is something the company is actively now naming two groups supported by the Chinese government. It is accusing of hacking its technology, state-sponsored hackers using flaws in its Sharepoint document management software, and a hacking campaign that has gone on for some time now. And I wonder your thoughts on this blog post that not only identifies China, but the specific groups within.
This is a deeply, deeply concerning vulnerability in hack. Sharepoint is a widely used application. I'll note there's two versions. One, enterprises manage themselves, one managed by Microsoft in the cloud. This vulnerability only applies to those managed by companies themselves. But because Sharepoint is so widely used, we can expect likely a fair number of victims. And the vulnerability is a major one. So attackers can not only steal data, they're stealing keys. And when they steal keys, think about physical keys in our own homes, that means they can get back in unless keys are changed, and they can maintain access unless organizations do a fair amount of work to not only patch, but to ensure new keys are being used. So a very concerning hack at this moment in time, and a very concerning vulnerability as well.
Well, you wonder what the government role here should be. And by that, I mean our government. In a statement, the Chinese embassy said China firmly opposes all forms of cyber attacks. Quote, at the same time, we also firmly oppose smearing others without solid evidence, unquote. We'll remind everyone that the budget put forth by the Trump administration, in fact, would cut almost $500 million, nearly 30% of positions at the Cybersecurity and Infrastructure Security Agency. Is this an administration that's equipped to deal with China in this way?
You know, exactly as you said, Joe, there's a role for government, and it's concerning. It's very concerning to see cuts in the government's cybersecurity mission, because this is a time when our infrastructure, our power, our pipelines, our water all run on digital infrastructure. And in many cases, that digital infrastructure is not secure enough to deal with threats by countries and criminals. But as a partner to government, there's also a role for the private sector. And I think there's real questions to be asked about how Microsoft is using AI to find and fix vulnerabilities in its products. You know, you may have seen just recently, Google announced Big Sleep, a partnership between their cybersecurity and their AI arm within Google that found and fixed a very significant exploit. And I think we should really be expecting tech companies to start using AI, not only to generate more secure software, but to look back at their enterprise of products, find and fix those vulnerabilities, because our digital infrastructure needs to be a lot more secure than it is for the reasons you just noted, countries like China and criminals as well.
That's a pretty compelling use case, and I'm really glad you could join us today. Ann Neuberger, Payne Distinguished Lecturer, Stanford University, former Biden administration, cyber. It's great to hear your insights today. We should note that Microsoft shares are a bit lower today, but still trading just below their all-time high, above $500. This is Bloomberg. As we talk politics here in Washington, what is there to talk about? President Trump in the West Wing today with the president of the Philippines. We are standing by for news, if we get it, on trade with a threatened 20% tariff against the Philippines. They are talking about that now. On Capitol Hill, it's a whole different ballgame. And by the way, we brought you a news conference a bit earlier with President Trump in the Oval. He was asked about Jeffrey Epstein. He talked about a lot of different things, from Jay Powell to Barack Obama, who he claims was a traitor for the Russia hoax, in his words, trying to change the topic here on the Daily Question about Jeffrey Epstein. I don't come here to talk about the Epstein files every day, but it's been impossible to hide from it. Case in point, what's happening in the House of Representatives. All work has basically stopped on legislation this week. There were going to be some votes on immigration and environmental related bills. They are not going to happen after Democrats tried to force a vote on the release of the Epstein files in the Rules Committee last night. The whole thing broke down. We're in a world now where we could see lawmakers going home as early as tomorrow in the House following what took place in Rules. But let's be honest. Long before we started talking Jeffrey Epstein in the last couple of days here in Washington, D.C., the last couple of weeks, there was a crisis of trust on Capitol Hill following what Republicans put together in the president's big, beautiful bill, then a rescissions package that clawed back congressionally approved funding. Something that we talked about with Congresswoman Becca Balint. The Democrat from Vermont joined us on the late edition of Balance of Power last evening. When we talk about the idea of a potential government shutdown, remember what the Congresswoman said. Let's listen.
Why should we negotiate in good faith? Why should we come together and do that hard work of coming to an agreement if in the end the agreement will not be honored? And that's what I've seen for my entire term in Congress now. This is my third year in Congress. Every single time we have an agreement, a top line agreement, it is only as good as, the words on the paper, because they do not honor it. So, of course, we have to look at playing hardball, because they break the rules and then they expect us as Democrats to continue to play by those rules.
Of course, we have to look at playing hardball, she said. I had just asked the Congresswoman if she was prepared to vote to shut down the government when the funding deadline hits on September 30th. Let's assemble our panel for their take on this. Bloomberg Politics contributors Jeanne, Zaino, and Rick Davis are with us. Jeanne is Senior Democracy Fellow with the Center for the Study of the Presidency and Congress. Rick, our Republican strategist and partner at Stonecourt Capital. Jeanne, is she channeling you when you listen to Congresswoman Balint in that case? And will Democrats vote to shut down the government?
We are hearing, and by the way, it was a great conversation with her, and you had back-to-back representatives last night, so we heard both sides, which was so wonderful. And I think she is channeling what we are hearing from Democrats more broadly. We heard the same thing from Brendan Boyle, the top Democrat on the Budget Committee, who said, how can we be expected to negotiate when we negotiate and then 2 weeks later they claw back the funding? And I think that is a story everybody can understand. If Republicans don't want to work in a bipartisan fashion, and we heard from Russ Vogt, they do not, then they will have to pass the budget as best they can by themselves. And that's something I think we're going to hear from a unified Democratic caucus as we go forward, unless, of course, Republicans decide to deal fairly with their counterparts.
Well, it does feel like things are frozen at the moment here, Rick. I don't know your thoughts on what took place in the House of Representatives last evening. We've talked about the rescissions package before, but this feels like we're in a more, if even possible, a more dysfunctional place than we were before. If Democrats continue to threaten a vote on Jeffrey Epstein files, can they get anything done?
Yeah, look, they're going to be gone. Nothing's going to happen in the House of Representatives for the balance of the summer, and that's probably a good thing. We need a reset to the politics that exists on Capitol Hill today. Right now, the future is pretty glooming, as you've pointed out. Why should Democrats cooperate with Republicans when Republicans are only going to break their commitments and come back after the funds that they both jointly, in a bipartisan way, agreed to pass? It is amazing that the rescissions package, $9 billion, has created this big a stink when Congress just passed $4 trillion of debt as a part of the reconciliation bill. That should be what people are fuming about, not $9 billion rescission package. And I think Democrats would be on much better ground to say that we have just run up a deficit, the likes of which no other president has ever done. I mean, I guess I missed the point that the rescission package of $9 billion, which is a rounding error on that deficit, is somehow going to make a big difference politically to the Democrats. But so be it. I don't give advice to Democrats, and they're on their own. Yeah. But it does look pretty gloomy when it comes to whether or not there can be a bipartisan budget that gets approved by the end of September.
So it sounds like we're cruising for a shutdown. It's not even August yet. It's about the principle here, right, Jeanne? It could be $1. The fact that it was approved, signed into law, this is why Democrats are angry. Am I wrong?
Well, absolutely. I mean, anybody who has negotiated anything knows that what is the point if the other side is going to negotiate and then a couple hours later pull back on what you've agreed to fairly. And I would just say that we are going to hear an awful lot, by the way, about the debt and deficit from the Democrats. There was a really important op-ed in the Times by James Carville, and he is speaking for many Democrats when he says the 2026 election should be run on one thing, and that is repeal the big, beautiful bill, or what they describe as the big, ugly bill. And one of the main reasons is Medicare, Medicaid. One reason is the food SNAP and other pullbacks on that. But a big reason is the debt and deficit. And so I think Democrats are going to do both. They are going to continue to ask to be treated fairly and for bipartisan negotiations with Republicans. And they are going to push for a repeal for this bill because the bill is regressive and it hits the working and the lower class harder in the interest of tax breaks for the wealthy.
Rick Davis, where's this Epstein going in the House of Representatives? Because it appears the House Oversight Committee is going to get involved here. And this is an interesting headline today. Tim Burchett, who's joined us on the program before, is responsible for this. The Oversight Committee will subpoena imprisoned Epstein associate Ghislaine Maxwell to testify before Congress. Burchett says he did not consult President Trump beforehand. He's got the support of the committee chair, James Comer, who also says he did not compare notes or speak with Trump or the Speaker of the House about this. This story is not going away anytime soon. What would testimony like this bring to this whole scandal?
Oh, I mean, you really have to wonder. I mean, why in the world would the Attorney General say that all efforts have been made to discover the truth about Jeffrey Epstein's, but Ghislaine Maxwell wasn't ever talked to? I mean, really? She's sitting just a few miles away from you. Now, evidently, according to the reporting I've seen, even the Attorney General wants to have a little tete-a-tete with Maxwell. So my guess is we may be right into this after Labor Day, where the theatrics of the House of Representatives, thank goodness they're there for entertainment value alone, are going to plunge deeply into this issue of Jeffrey Epstein and just keep it alive a little bit longer. But there are a lot of Republicans scratching their head wondering, is it every man for himself today? What's the Attorney General going to do? Cut a deal with Maxwell not to testify to the House? I mean, this is going to be an interesting August.
Well, you got that right. Boy, just when you thought the dog days of summer were arriving, we just got a readout, guys, on the president's meeting with President Marcos of the Philippines. President Trump writing, "It was a beautiful visit. We concluded our trade deal, whereby the Philippines," he writes, "is going open market with the United States and zero tariffs. The Philippines will pay a 19% tariff. In addition, we will work together militarily," remembering that the president had threatened a 20% tariff in the trade letter that went out. So, Jeanne, President Marcos just saved himself 1%. We call this a trade deal?
I don't know if that's what he came for. It seems to be that's what he's leaving with. It'll be really curious, and I have not seen this readout. It'll be really curious to see what the President Marcos side has to say about this. But my gosh, you go in with 20 and come out with 19. I think the president has won this round, but unfortunately, it is the American public that will pay that 19%, not the Philippines. And that's something that needs to be underscored repeatedly. This is a tax on the American consumer should they buy anything from the Philippines.
The Philippines will pay a 19% tariff, he writes, the United States 0. Maybe, Rick, you're more concerned with the next line here. We will work together militarily. How important is that when it comes to China?
You know, look, I think it's critical. Philippines has always been a strategic partner of ours for many years. We've had ups and downs with the island. We got kicked out of Subic and Clark Base in the early 80s, and we've now been able to resurrect that military relationship. But, you know, look, I mean, you do wonder, you know, the Philippines are in a position to give blood and treasure to our effort to contain China aggression in the South China Sea. They've been harassed and shot at by the Chinese, and yet we're going to slap them with a 19% tariff. I really wonder what the symmetry of all this policy is, because sometimes it doesn't make any sense.
Rick Davis and Jeanne Zaino with breaking news in the clutch here from the White House following the president's meeting with the Philippine president. Many thanks to both of you. Of course, Bloomberg Politics contributors Rick Davis and Jeanne Zaino. We're going to have more on this, the emerging details on this deal here in a conversation ahead with Doug Rediker, who's going to join us in studio just a couple of moments from now. We'll also check the markets with Charlie Pellet to see if there's a Wall Street reaction here. There hasn't been too much Wall Street concern over the matter of tariffs now for weeks as we head for an August 1st deadline on reciprocal tariffs. Right now, the Dow's ahead by 138. S&P 500 is up 5. The NASDAQ remains lower. It's down about 65 points right now. Much more ahead here on Balance of Power, only on Bloomberg. You wouldn't think there was a trade deadline a week and a half away, remembering, of course, how the markets behaved following President Trump's Liberation Day. But we do have news on the trade front. President Trump meeting today with the president of the Philippines. President Marcos was in the Oval Office. There was a half-hour back and forth with the White House press corps. And when they went back behind closed doors, they did strike a trade deal, according to President Trump, who says the Philippines will go open market with the United States and zero tariffs. I'm reading his language here. Quote, the Philippines will pay a 19% tariff. The United States will pay zero. He says, in addition, we will work together militarily. It was a great honor to be with the president. This was a pretty short meeting. They spoke with reporters for about a half hour, met for roughly an hour, and the president just posted this a short time ago. We're joined in studio now by Doug Rediker, ahead of this August 1st deadline. It's a conversation that we've been looking forward to. Founder, managing partner, International Capital Strategies, a former member of the executive board on the International Monetary Fund. Doug, it's great to see you. Welcome back to Bloomberg TV and radio.
Thanks, you.
So I guess we'll call this a deal. We don't have much more than what we're seeing in this brief post from the president here. There have been a number of framework agreements, which might be the way that you describe this. But with all the noise in Washington today, this is the closest thing we have to a bit of news. This is a market that has been very forgiving to this president. Do you expect further deals to emerge?
First of all, we have to put deals in quotes.
Okay,
because, as you said, a deal is a framework, and a framework is still an undefined set of agreements that is not entirely, even the UK deal is not entirely bedded down. So let's be careful how we expect to see things until they're in writing. Until you have a tariff schedule that is sent to a customs officer who reads across and says, this product gets this tariff, we actually don't know what's in these things. Do I expect more deals? Deals in that amorphous sense, maybe kind of, sort of, yes. Yeah. But I'm very worried that the markets broadly have just become overly complacent, overly sanguine, either because they don't really fully appreciate the impact that is forthcoming, or because they go back to the taco trade and they think, well, Trump's going to back down in a matter of days anyway, therefore let's just go on our August break. I'm just not sure that's going to be a great strategy, at least in the short term.
That's a pretty risky proposition if it's one or the other here. We've got markets that are knocking on all-time highs on a daily basis here. You seem to suggest we could be in for a reckoning.
Well, I think the economy, I mean, I'm not going to say the economy is not strong. The economy is doing fine. However, that's in part because of these artificial postponements of the impacts of tariffs that have basically made sure that the impacts of those tariffs are not being felt. Yeah. If everybody assumes that you're going to kick the can down the road on tariffs forever, then fine. Then the floodgates of growth and, modest impacts are for as far as the eye can see. But I'm a little more skeptical that this is all sustainable when you've got big countries, Japan, the EU, that are Canada and Mexico, where these are the U.S.'s largest trading partners. And it is not clear there's going to be a deal, and if there is a deal, that deal is sustainable.
Yes.
So I'm very anxious that people haven't fully digested what could be coming.
Well, it's coming out in the wash here a little bit in earnings reporting season. Some of these conference calls this week, Doug, have been really interesting. Lockheed Martin today pointing to the cost of steel when it comes to making missiles. General Motors, similar situation. In fact, we heard from Paul Jacobson earlier today. He's the CFO at General Motors about the supply chain pinch that this has been creating. This is from earlier today on Bloomberg TV and radio. Let's listen.
Since COVID, we've been looking at creating more resiliency in the supply chain, and we've onshored a lot of things, as we mentioned in our last call. Only about 3% of our direct purchases come from China through the supply chain, so that's helped us a little bit in terms of being proactive on that. Obviously, we'll do some resetting in partnership with our supply chain partners, but it really starts with our manufacturing footprint.
Resetting in partnership with our supply chain partners. That's real. That's different than waving tariff letters around here. When you hear a company like General Motors talking like that, what does that tell you about the evolution our economy could be about to go through?
Well, it says take notice and pay attention. And while the auto sector is particularly exposed, they're getting it on autos themselves, on auto parts, on steel, on aluminum. The auto guys are really in the crosshairs. But I think we can, I'm not saying it's a canary in the coal mine, but certainly we should be taking it very seriously. That, as I said earlier, the impact of these tariffs across supply chains, across economies, across trading patterns is just not being fully appreciated, in part because companies have gone to great extremes to try and mask it, tamp it down, not only under political pressure, but under the risk/opportunity that these tariffs will be reversed by the Supreme Court ultimately, if not the interim courts along the way. So they're saying, well, let's try and keep things as stable as we can until we're forced. But there will be a point at which they might be forced.
Well, and that's pretty interesting here when you consider the possibilities. That what you just described has given the administration cover to say tariffs are not inflationary. Look at the data. You guys have been talking about it for months and we don't see it yet, but we of course know that it's been spread around. It has been shared by companies and in some cases has yet to hit the hard data. When do you see that happening?
Well,
there have been some cracks already.
A lot of companies front-loaded.
Yep.
And we don't know exactly when that's going to run out, but it's inevitable that it's going to run out. So I can't say what the date certain will be where actually you start to see a spike in inflation because these new orders have to replace the stockpiles that are being drawn down. But I do want to go back to one point, which is the snatching defeat from the jaws of victory, which is I think President Trump did a spectacular job in basically getting everyone to accept the baseline 10% tariff, which 6 months ago we all said nobody's going to accept a baseline 10% tariff. Suddenly, whether it was the EU or others, said we will accept the 10% tariff. And if you just look at it from a budget deficit reduction standpoint, that's $280, $300 billion of additional revenue. There's a lot of upside to Trump's own agenda.
Listen to you.
What did he do? He extrapolated a linear, if nothing bad is happening at 10, then nothing bad will happen at 20. And so now he's just overplaying his hand. So whether it's the EU or others, they're all saying, we swallowed hard. We were willing to accept something we didn't want to accept. Now, you're at risk of overplaying your hand. That's what worries me, because then you've got the risk of no deal or tariffs that are so inflationary and disruptive that it does have a serious impact on the economy.
I want to ask you about Jay Powell while you're still with us, because if the market's whistling past the graveyard on tariffs, you could argue the same when it comes to Powell. Then again, we heard from the president earlier today, and it doesn't sound like he has any intention of firing him or even forcing him to step down. He says, we'll give it the next 8 months. It's not that long anyway. Is this even a story?
Well, it's a story because the markets focus on it. But I don't think the markets are wrong to somewhat take the president's words today, at least, that he's not planning to fire Chair Powell before the end of his term. I think taking that at face value is probably a good bet. I think that obviously Trump is trying to jawbone Chair Powell and the FOMC into, bending to his wishes. I don't think that they are susceptible to that. But I think the markets, while they clearly get excited whenever there's a talk about changing the Fed chair for good reason, I think they're probably correct in tamping down the expectations that Trump is going to pull the trigger. I'd throw in one political observation, which is if something else happens, something unrelated to the Fed, and President Trump needs to change the narrative, he is prone to doing something which will absorb all of our eyes on new headlines. And one of those possibilities could be the so-called wag the dollar scenario, which is you threaten, if not pull the trigger on firing Chair Powell in order to distract attention from something else that you really want people not to focus on.
Not that there's anything like that around here these
Nothing
days.
in
Doug,
Washington
I've been
these days.
looking forward to seeing it. I appreciate your coming in. Doug Rediker, International Capital Strategy, is with us live in Washington here on Bloomberg TV and radio. All the talk of Jay Powell, we should mention the fact that there's an important Fed conference taking place across town. Jay Powell, in fact, addressed that group earlier today, did not talk about his tenure at the Fed. Let's listen to the Fed chair from earlier.
We need to ensure that all the different pieces of the capital framework work together effectively. Doing so will help maintain a safe, sound, and efficient banking system for the benefit of the people we serve.
That was at the Integrated Review of the Capital Framework for Large Banks conference. I don't know how they come up with the names of these things, but Bloomberg's own Katanga Johnson has been spending the day there and joins us now live from the site in Washington, D.C. Katanga, it's great to see you. Sam Altman, another bold face, speaking earlier today at this event. What's the purpose of bringing in the face of AI to speak around Jay Powell today at the Fed?
The organizers today are really keen to discuss all the intricacies of capital, but to take a break from that deep discussion, the Fed did invite OpenAI CEO Sam Altman to discuss more broadly what the impacts of the banking system of financial services might be if regulators could get the balance right of capital requirements, but also open relationships with whether it's OpenAI, and he even said, or his competitors, to really address issues like potential fraud, potential underwriting, and other use cases for AI in this imaginative future he described.
Interesting. We didn't learn, as I mentioned, anything about the tenure surrounding Jay Powell on a day that President Trump spoke about the Fed chair again and suggested he let him finish out his term. But it's also an important day for the Vice Chair of Supervision, Mickey Bowman, also at this event. Katanga, what did we learn from her?
That's right. Bowman did think through beginning her term with a conference that brought together academics, advocates, and the industry to discuss not whether necessarily capital should be raised or lowered, though the direction of travel might be lowering capital requirements, but really to have a conversation that informed rulemaking before the rules are written, to invite comment from a broad range of participants so that once the rule writing team gets the pen, they can actually consider what it might look like to have a broad range of impacts earlier on. It's interesting, in part, Bowman really was a critical voice of the previous vice chair for supervision, Michael Barr, under President Biden. And for her, beginning her tenure with a more transparent process of rule writing and really seeing what the relationship of different rules are on one another and for the American public is how she wants to make her mark in this role.
Really interesting. Just in our remaining 30 seconds here, Katanga, was the mood in the room any different than it would have been a couple of months ago with all the talk of Jay Powell being fired or stepping down, the talk of renovations going over budget? Was any of this hanging over the event?
You know, Powell was in the room, and I saw him engaging with a number of participants. No one that I've spoken to privately or publicly have discussed Powell in the job. People are really focused on, well, what are the rules going to look like regardless of who's in the chair? Yes, the mood of the room is a little different than it might have been before the heated tensions between the White House and Chair Powell. But the bankers and advocates and academics, and even Altman himself today, really wanted to think about, if we get the rules right, how can we envision a future that really benefits Americans and helps them be on a stronger economic and financial footing?
With us live from the Fed conference, Katanga Johnson. Many thanks, Katanga. It's great to see you, and thanks for bringing that story to us here on Balance of Power. I'll meet you back here on the late edition, 5 p.m. Eastern Time. Balance of Power, only on Bloomberg TV and radio.